There are strong, powerful forces that are working against you. These forces are a lack of focus, an attention deficit, and a lack of discipline. The pinnacle of your focus is to find a way by any means necessary to overcome these obstacles. This is the road which you must navigate as a Forex trader, either on your own or as part of a collective. Somebody somewhere once said, and I quote, "Trading Forex is the hardest way to make easy money." Whether you agree with this statement or not, quite frankly, doesn't matter, because the observable reality displays evidence of this truth on a consistent basis. Your ability to control your psychological state of mind and your capacity to overcome temporary defeat are paramount. Now, let's begin the breakdown of the demand zone and how you can capitalize on this simple candlestick pattern. For this example, we are going to narrow our attention first to the daily time frame, and then later on in the video, we will drop down to a smaller time frame. So, candle number 1 is bearish candle. The direction of the candle is down. Candle number 2 is a bullish candle that fully engulfs candle number 1, and the direction is up. When candle number 2 engulfed candle number 1, that created a liquidity gap, which at some point is going to be filled by the price action in a form of a retest. Candle number 1 is day 1. Candle number 2 is day 2. These two previous candles have formed a demand zone, the area where purchasers are holding out. To drive the price upward is known as a demand zone. Demand in Forex terminology refers to the situation when there is a stronger demand than there is supply for the base currency, which eventually drives up the value of the base currency is seen by the rising candlesticks. The zone begins at the open of day 1's candle, where the proximal line starts. We draw the proximal line and extend it into the future from the level where the zone stops. At the bottom of the wick, the area in between the two lines is the sum total of the demand zone. As soon as this area of influence is formed and is unmitigated, it becomes a hotspot for when the price comes back during a pullback. Furthermore, when day 3 candle opens, all we are waiting for right now is for the price to come back into the defined zone. The concept of the move that happens after price consolidation opens is called the first move principle. Immediately after price reaches your zone within a zone, all you need to do is enter on an engulfing candle, stop loss right below the wick. Your take profit is as much as you can possibly grab from the market, but in general, 3% is quite an achievable target. So what makes this setup different from any other setup? Absolutely nothing. This setup is one of many, and in order to master it, you must trade it over and over again. You need to back test it, forward test it, demo test it, and then test it on a live account. The sheer volume of application that you put in is what makes your skill supreme. No pattern is perfect, and no setup is complete. Without adequate risk management, do not be one of the many traders who lose their whole account in a matter of days owing to poor risk management and negative mindset. Instead, manage your money carefully, progress cautiously, and avoid being one of them. Your ability to trade effectively might be destroyed. If you lack understanding in this particular area, to save yourself time and capital, click on the window on your screen. Now,